All right, let's jump right in, because today's explainer covers a topic that is quite literally worth millions. We're getting into the ultimate guide to the VAT exemption and refund process, specifically for real estate developers right here in the Kingdom of Saudi Arabia. Look, if you're operating in this rapidly growing market, you already know that understanding the mechanics of taxation isn't just a compliance exercise. It's absolutely crucial for protecting your cash flow and keeping your projects profitable. So we're going to break down the exact regulations straight from the tax authority's guidelines to make sure you know exactly how to manage those project finances. To really understand this refund, we've got to start with one very important number: 5%. In the kingdom, the sale of real estate and land is actually exempted from standard value-added tax. Instead, those transactions are currently subject to a 5% real estate transaction tax. Now, this shift is a massive deal. Since you aren't charging standard VAT on the final sale of your property, it totally sets the stage for a huge amount of potential financial relief when it comes to recovering the VAT you've already paid on all your construction and development expenses. To put that into perspective, if you've got a 100 million rial project, well, 5% is 5 million rials just sitting there stranded if you don't follow the right steps. And honestly, that brings us to the ultimate quest here, and a question you really need to be asking yourself. Do you actually know how to get your VAT back? Are you taking the exact procedural steps needed to claim back the taxes on those massive project expenses? You know, a lot of businesses just kind of assume this happens automatically, or they leave the whole shebang to their accountants without really understanding the operational side of things. But missing the nuances here means you could literally be leaving significant capital stranded with the tax authority, instead of using it to fund your next big development. Okay, let's look at our roadmap for today. Section 1. The qualified real estate developer. Section 2, registration conditions and steps. Section 3, tax refund rules and exclusions. And Section 4, procedures for receiving the refund.
Starting right off with Section 1, the qualified real estate developer.
So notice the absolutely crucial distinction we're making here. A qualified developer is the legal entity that holds the official deeds and actually owns the real estate. They are the ones who get the refund. A construction contractor, on the other hand, merely supplies the building services, goods, and labor. If your role in the project is strictly as the contractor, these specific developer refund rules do not apply to you. You've got to be the official property owner to claim this financial prize. Moving right along to Section 2, registration conditions and steps. So, to even sit at the table, you have to strictly meet 4 specific legal and licensing conditions. First up, you've got to take a recognized legal form. That means either a sole proprietorship with a commercial register or another legal entity recognized under corporate law. Second, you need an active license to practice from the Ministry of Commerce. Third, that license needs to be hyper-specific. You must be licensed for real estate activities, so things like buying, selling, renting, developing land, or constructing buildings. And fourth, you have to have official approval from municipal affairs explicitly recognizing you as a qualified real estate developer. If you're missing even one of these 4 pillars, your registration is basically going to be a no-go. Now, assuming you've got all your paperwork squared away, getting your official ID number is a pretty straightforward digital journey. Step 1. Log on to the tax authority's portal. Step 2. Head over to Public Services and hit Register as a Qualified Person. Step 3. You'll choose your specific category and the time period for your registration. And finally, Step 4. Just upload all the supporting documents we just talked about to prove you meet the conditions. Once that's approved, boom, you are officially in the system. Let's dive into Section 3, tax refund rules and exclusions. Once you're registered, we've got to talk about the rigid rules regarding what you can and can't write off. Because without official ownership deeds and a strict designation for off-plan sales, your refund request is going to be stopped dead in its tracks. The authority actively verifies these property-level conditions. You literally have to prove you own the land with official instruments like a title deed. Plus, the property has to be allocated specifically for off-plan sales projects. And a quick warning, if the authority finds out you violated these terms, or if you try to claim a refund for projects that don't match your registered commercial register, they have the absolute right to just exclude you from the process entirely. Look, you've got to remember that the tax authority is strictly in the business of funding your real estate development. They are definitely not subsidizing your weekend entertainment or a personal shopping spree. You can claim valid tax invoices that are strictly tied to project materials and construction, but you absolutely cannot claim entertainment and event tickets, optional health insurance, unless there's a specific legal obligation forcing you to provide it, restricted vehicles, including their gas and maintenance, or any personal use goods. It's strictly business. And when you're actually ready to ask for your money back, you have to bring the receipts. Your request needs comprehensive project data and every single valid tax invoice to back up your expenses. You can't just throw out a total sum and call it a day. The authority demands a complete project statement. We're talking the project's name, total cost, start date, end date, the current completion percentage, the overall purpose of the project, a copy of the deed, and a full bill of quantities. Along with all of that, you have to hand over a detailed statement of purchases backed by tax invoices that meet every single legal condition of validity. Which brings us to our final part, Section 4, Procedures for Receiving the Refund. Welcome to the final boss stage of the explainer. First rule of actually filing. Your request has to hit a minimum threshold of 5,000 riyals. Now, the system does give you some flexibility. You can submit your refund request monthly, quarterly, or annually. However, you can't submit more than one request per filing period. And, regardless of the period you end up choosing, the absolute minimum value for any single refund request has got to be at least 5,000 riyals. Next up, you really need to be vigilant with your calendar, because you only get a strict 6-month window from the end of your filing period to submit your claim. So say you choose a quarterly filing period. Well, the clock starts ticking the very moment that quarter ends. If you wait 7 months, that VAT is legally lost. Poof, gone. Seriously, do not let administrative delays cost you your own capital. But here is the ultimate payoff for being diligent. 60 days. Once your request is successfully analyzed and approved, the authority is legally mandated to deposit your funds within 60 days from the date of the request, which honestly provides excellent predictability when you're forecasting your project's cash flow. So here is exactly how that final sprint looks, step by step. Step 1. You submit your request through the Qualified Persons Portal. Step 2. The authority receives and analyzes the data. And keep in mind, they usually won't just take your word for it. They'll ask for specific samples of your invoices. Step 3. You attach those requested invoice samples for their review. And finally, Step 4. Once everything checks out, they issue an official notification and drop those funds right into your account within that 60-day window. Now, it's also incredibly important to know your rights during this final phase. Yes, the authority has the right to examine and audit you after processing the request, but rest assured, if their audit numbers don't match your numbers, you absolutely maintain the legal right to object and protect your interests. You can choose to accept the result of their study, or, actually, if you think legitimate project expenses have been unfairly excluded, you can formally file an objection. Because missing even a single one of these critical steps, whether it's operating without the right municipal approval, trying to claim non-refundable expenses, or just missing that 6-month filing window, means abandoning thousands, if not millions of riyals right there on the table. So I want to leave you with this thought. Are your current projects fully registered right now, or are you leaving your money behind? Take some time today to review your current developments. Make sure your legal status is totally aligned with these guidelines, and go claim what's rightfully yours. Thanks for joining me for this explainer, and here's to maximizing your returns in the market.